ಸ್ಟಾರ್ಟ್ ಮಾಡಿದ್ದೀನಿ ಸ್ಟಾರ್ಟಿಂಗ್ ಸುಮ್ಮನೆ ಲೈವ್ ಆಗಿ
Good evening, Kripa ma'am. Hello.
Hi, sir. Good evening, sir.
Ma'am, Prachi ma'am is there. Prachi ma'am, are you there?
Good evening, sir. How are you?
Good ma'am. What about you, ma'am?
I'm doing good.
Good evening, ma'am.
Good evening, ma'am. How are you?
Ma'am. Good, ma'am.
Okay. Can we start, ma'am?
Yeah, I'm fine.
Yes,
7:15.
please.
No, will students would have joined.
No, ma'am. They have already joined through YouTube
Okay.
Live, ma'am. Yes, ma'am. Yes. Kripa ma'am, we can start, ma'am.
Okay, sir. Okay, sir. Good evening to one and all. Welcome you all for the second day workshop on financial statement analysis. So in our last session, you have learned the various techniques on financial statement analysis. So in this session, you're going to learn the other concepts in a financial statement analysis. So with the blessings of Pooja Mahaswamiji, due respect from our principal and constant supporter of department head, Dr. Mamata J, I take this opportunity to welcome our today's speaker, Dr. Prachi Beriwal. Welcome you, ma'am.
Thank you so much, ma'am.
Okay. Dr. Prachi Beriwal is currently working as an associate professor for a School of Management and at Presidency University, Bangalore. She has a 17 years of academics and 3 years of industry experience to her credit. She has been awarded doctorate in the year 2018. She has been awarded for being a distinguished teacher by MTC Global and Best Teacher Award by INSC Bangalore and Best Administrator of South India by Prime Time Research and various organizations she has served as an academician. So she has authored 2 books on accounting, namely Fundamentals of Accounting and Corporate Accounting. She has also edited a book titled Innovations in Business, Management and Technology. She visited various colleges and universities as a guest lecturer due to her expertise in accounting and taxation. She has presented more than 20 papers in national and international conferences in India as well as abroad and published various articles in national and international journals. And also, she also worked for a Kannada movie, Vitra, recently. She is a good listener and learner and able to communicate with the people from all walks of life. Her pleasant and friendly approach has always been admired by her students. So welcome
Thank
you,
you,
ma'am,
ma'am.
for our workshop.
Thank you so much.
Welcome, ma'am. Over to you, ma'am.
Yeah. Shall I start my presentation, sir?
Yes, ma'am. You can start the presentation.
Yes, ma'am. You can share your screen, ma'am.
Yeah. Thank you. I hope it is visible.
Yes, ma'am. Yes, ma'am. Perfectly fine, ma'am.
Thank you.
Ma'am, can you make it as a full screen, ma'am?
Yeah, that's what I'm doing.
Yes, ma'am. Please, ma'am.
Okay. Good evening, everyone. I hope all of you are doing well in your own personal space, not going out much and helping every one of us not to spread more, virus in this pandemic. I'm Dr. Prachi Bilwal. My introduction has already been given in brief by Krupa ma'am. First of all, I would like to thank Professor Brijesh sir, who has given me this wonderful opportunity. SJB Institute of Technology, Dr. Mamta ma'am and Krupa ma'am. Thank you so much. So, topic for the today is financial statement analysis. And under financial statement analysis, I have restricted myself to vertical and horizontal analysis. Now, what are the takeaway from today's session? Today's session, you will be able to learn more about financial statements. I have tried my level best to give you a brief introduction about financial statement, and then we'll be learning about financial statement analysis in vertical format and horizontal. Now, the flow of the presentation goes as follows. We will be meeting a very special person today in our presentation, Bulara. Then we'll be learning about financial statements, attribute or characteristic of financial statements, uses of financial statements, advantages and disadvantages, financial statement analysis, types of financial statement analysis, that is vertical and horizontal analysis, and sample questions. Now, meet Mr. Bolaram. Now, who is this Mr. Bolaram? Mr. Bolaram, the name suggests that, he is very innocent chap, very, very innocent. Now, he got an idea to start his own business organization and established it somehow. He really worked very hard to take his organization to the next level. End of the financial year, he wanted to know about his financial performance and could not do it. Why? Because he was constantly working and somehow didn't know that he's supposed to record all his transactions. He's supposed to analyze all his transactions. He is supposed to do other necessary documentation work. Then somebody suggested him that, why don't you go and meet an accountant? He might be able to help you out. Then Mr. Bolaram, he went to the accountant and he sought help. So what the accountant helped him in understanding, how to record the documents, how to record the transactions. And he also helped in preparing financial statement and report. He somehow, help in interpreting the financial data to Mr. Bolaram. And then Mr. Bolaram realized that he's a more successful person. In a year, he has really done a lot for his business. So from Mr. Bolaram, he converted his, he kept his name as hero number one. Okay. Now, do you think so? What made Bolaram to change his name from Bolaram to hero number one? Right? Was it profit? No. Was it accountant? No. Was it hard work? Yeah, to some extent. But what actually changed his, mentality, or what actually changed his perspective was the financial statement. If financial statement wouldn't have been there, he wouldn't have realized that he's actually a hero, right? So this miracle happened suddenly, and all his tension and worry swept away because of the financial statement. Now, what this financial statement did, they acted like a mirror for Bolaram, right? So what are these financial statements? These are the end products of the accounting process, which reveals the firm result of the specified period and financial position as a particular date. It is a basic and formal annual report through which a business communicates financial information to its various groups. Now, these financial statements are basically of four types: income statement, balance sheet, cash flow statement, and now let us understand what each and every type of financial statement actually means. See, whenever we talk about income statement, the only thing which comes to our mind is that like the statement which is telling how much is my profit is an income statement. No, in fact, income statement talks a lot more than that. Income statement talks about our costs. Income statement talks about our direct expenses and indirect expenses. Income, with the help of income statement, we can reduce our cost. So there are a lot of aspects of financial performance of business which we get to know through income statement. So basically, it is a summarized, data of revenue and expenses of an accounting period, including definitely the profit earned by the owner. Now, what is balance sheet? Balance sheet is the sheet which is balanced. Yes, definitely. So when we talk about balance sheet, we're talking about the asset and liabilities, capital, equity of the business, right? The assets which are owned by the organization, people who claimed against these assets. The people could be belonging to the business, that is the shareholders, the owners, or these people could be from outside, that is the creditor, the people who have given loan to the business, or it could be the investors. Now, what is cash flow statement? We all know how important it is to maintain cash in a business. how important a cash is. It is like a lifeline of the business, right? So each and every time the business person is always worried about, do I have enough cash in my organization to manage things, right? So the account or the statement which tells us about the cash and cash equivalent for a particular period, which also helps us in understanding that how much receipt have we made through cash and however payment we have made through cash is cash. Ultimately, how do we certify all this? Right? Income statement, balance sheet, and cash flow statement has to be certified. Then only it can be proved in the court of law. So what happens? The auditor gives a report. Now, there are a lot of things which we do in business. So the auditor reports include everything about the organization. It also talks about the financial performance of the business. It talks about the solvency position of the business. And in case if there are any changes which has been made in terms of maybe like inventory control, in terms of methods of depreciation or anything else, in case if there have been any rectifying entry passed. So all this is certified by the auditor. Now, just a sample and a glance of it. What left-hand side you see ABC Limited income statement. It is an income statement which is talking about the revenue, that is our net sales, cost of goods sold, our profits, and various expenses. On the right-hand side, if you see Guru Electronics, it is talking about the balance sheet. So the balance sheet talks about the sources of fund and application. Sources of fund, the funds through which we got money to start our own business. That could be capital, that could be liability from long-term sources or short-term sources, and it also talk about the money we earned, the savings we have made, that is reserves. When we talk about application of funds, we are talking about the application of the money we have collected for the business, right? How did we apply our capital? So we are talking about the fixed asset. We are talking about the asset. These assets could be fixed asset, it could be tangible, intangible, current assets. Now, when we talk about cash flow statement is divided into three categories. It is not only telling us that how much is a cash balance in the beginning or at the end of the period. It is also talking about that in what way, in what forms are we receiving cash or spending cash in the business. So the basically three activities what we divide to understand cash flow statement in a better manner is operating activity, the day-to-day operations of the business, investing activity, the basic investment what we have made through cash or any cash received through investment, and financing activity. So how much money we have invested in, if we have paid dividends, if we have paid to the dividend for the dividend, if we have received anything from terms of long-term loan or the capital. So all this is financing. And ultimately, what you are seeing, see, audit report depends on the business to business, right? So it is just a sample of audit report. Now, what are the characteristics of these financial statement? There must be some attributes, there must be some characteristics of these financial statements. So let us understand financial statement characteristics. There are many, I have picked up only a few, right? So understandability. Financial statement must be prepared in such a way that it is easy to understand and interpret for the users of such information. See, it could be a possibility if I'm a prospective investor, I'm looking out for, a long-term sustainability of my money in the business. In case if you're a supplier looking out, whether when you give credit to this person, whether this organization will be able to repay him back or not. In case if I'm a banker, my perspective might be different, right? So everybody should be able to understand what is there in the financial statement. Relevance. So information provided in the financial statement must be relevant to the needs of its user. The requirement of a shareholder will be different from the potential investor or the supplier or could be a creditor. Now, reliability. That's the most important concept, right? So information extracted, it is not only about the reliability of the people who are using it, right? It is also talking about, the business organization, the owner, the people who are belonging to the organization should give the correct and reliable information to the auditor for the preparation of final accounts, and even the auditor or the accountant should be giving the reliable and trustworthy information to the users, to the end user. So it should be, giving a true and fair picture of the organization. When I say comparability. So financial statement must be prepared in such a way that we are able to compare it for at least more than a year. That is a basic advantage of preparing comparative income statement and comparative balance sheet. Now, when I say compliance with the law, there are a lot of rules which has been given by accounting board. There are a lot of accounting standards we are supposed to follow. We have 10 concepts and 4 conventions. So we are supposed to follow the various concepts, given by the accounting standard board. The auditor has to compare, it has to be, following the conventions. They have to adhere to the conventions given to them, and other laws they have to follow. Like when they are presenting, it has to be in the proper format. Then they have to give justification where it has to be given. All that. So when I talk about promptness, financial statement must be prepared and presented at the earliest possible. It is like, they should start preparing it as soon as the financial year or the accounting year. Now, what is the use of this financial information? Or who do you think so are using this financial information maximum? So to understand in a better manner, we have classified the uses of financial information in two. One is internal user, another is external user. Now, when I talk about internal user means the people who are belonging to the day-to-day operations of the organization. The people who have their long-term interest in the organization, right? Now, these people take active part in the decision-making of the organization. These people could be the employees, they could be the owner, or they could be the board of directors or the management. On the contrary, the people who have only financial interest in the organization, they have nothing to do with the operations of the business, and they also do not take any decision. They can be categorized as external users of the accounting information. So these people could be creditors, they could be general public who are planning to invest in that organization. These could be government agencies who are giving loan. They could be taxation agencies. They could be credit ranking agencies, and it could be bank. Now, one more aspect. Like, see, if you are a BBA student, right, or in case if you're an MBA student, you will be doing a project. So anybody, like when we do project on the organization, right? So in that case, if you are a research scholar, even you will be seeking the financial information of that organization as an external. Now, what are the advantages of these financial statements? See, every coin has two sides, right? Similar way, financial statement also has both the sides. It has a lot of advantages. At the same time, it has a lot of disadvantages. So when we talk about the advantages of financial statement, it is like, first of all, it is compulsory to prepare the financial statement, right? Because, that's the way it reflects what is happening in the business. The only way it can be reflected it is in the form of financial statement. Now, in case, if whether it is the internal users, whether it is an external user, both need financial statement. So when we talk about these internal users, basically they need these financial statements to make decisions. Now, these decisions could be in the form of long-term solvency. It could be in the form of expansion. It could be in the form of deciding purchase of new asset. It could be in the form of like whether cost of goods sold, like whether they need to reduce the cost or they can like increase their sales, or what are the terms on which they can pay money to the creditors or collect money from the debtors, right? So there's a lot of decision making which is involved in the part of management. Now, this decision making is possible only with the help of financial statement. Now, when we talk about these financial statements also help us out in case if you are availing for credit, right? So whether am I supposed to take the credit from an organization, from a bank? Am I supposed to borrow it from the investors, from the market? Am I supposed to take it from other loaning agencies, or shall I go for maybe personal loan, right? So how is my organization able to repay it back? What is the rate of interest which my organization will be able to take up? So all these decisions we are able to make only if we have financial statement with us, right? These financial statements also help us in predicting the future. Nobody can predict the future, but somehow on the basis of certain analysis, like these tools and techniques, we are able to predict a little bit about our business, right? It also helps us in predicting the earning prospects and growth rate on which our business will be earning in future. right? It also helps us is knowing, like what is going to be like in case if I'm going public, in case if I'm issuing shares in the market. So it also helps us in knowing like, how par excellence it will be doing, right? The analysis of financial statement is also a significant tool in predicting the bankruptcy and failure probability of the business enterprise, right? Now, let's talk about the limitations or the disadvantages of financial statement. It is an interim report and not the final report. Now, why do I say that? Right? That it is an interim report. See, when we prepare financial statement, we prepare financial statement at the end of accounting period. Now, when I say accounting period, I'm definitely not talking about the period from April to March, right? I'm talking about, it could be it depends on the requirement of the business. Sometimes if you have started the business in the month of October, right, then your first financial accounting period will be right from October till March 31st. Okay. So when we talk about these interim reports are, like as soon as the accounting period ends, on the basis of whatever the financial transaction or the records provided by the organization, the financial statements are prepared, right? Now, when we talk about the final report can only be prepared in case if we are closing down the business. Otherwise, all the reports, all the financial statement, what we keep preparing year to year, they're called as interim report and not the final. Lack of objective judgment, right? Now, see, it is all about perspective. Some people might think the glass is half empty. Some people might think the glass is half full. Similar way, it might go judgmental, right? Some people may think, oh, business is doing very well, the profit has increased by 10%, but they're not realizing maybe cost has also increased at the same time. Some people might be thinking only about the cost. Some people might be thinking only about, like we have paid all our loans, right? So there are a lot of possibilities, like everybody has their own different perspective. Though financial statements are prepared in accordance with the law, but the way we read it, the way we predict it, but the way we perceive might be different from one person to another. Now, it records only monetary fact, right? That is the basic of any accounting. So sometimes what happened, there might be certain reasons, right? There might be a reason that business had suffered a lot of losses because the business organization was closed for 3 months due to this pandemic. Or it could be a possibility, that government policy has changed. There could be a possibility, because we have, closed all our ties with China. So there could be a possibility that my import or my export has got affected, right? But we don't write on that. We only write that, how it has affected in terms of quantity. We never talk in terms of quality. So in case after 4 years or 5 years, somebody else, if they are doing, analysis of these financial statements, they might not understand the reason. So that is also one of the demerit of financial statement. Now, historical in nature, we only talk about the past. We never talk about the future, right? Because it is unpredictable. One. Second, there is no fixed format as such today, or no, nothing has been identified where, I can predict exactly what is going to be my future in business, right? Or what is going to be my profit, or, what is going to be my expenses, what is going to be my growth. You can't predict. So whatever, transactions or whatever records we have in terms of financial statement, it is all historical in nature. There's nothing of present, there's nothing of future. Scope of manipulation, very, very easy, right? Now, if I say my chartered accountant has done justification to my accounts, right? At the same time, I should be guaranteeing that I have given justification, or I have been very, very truthful regarding my transactions, regarding my bookkeeping or my accounting with my accountant, right? See, unless like Western countries, we do not have public accounting. We have private accounts. All of us know it is a, like open secret. In case if a business person needs some kind of manipulation in the accounting system, that is possible. So that is one of the demerits of a financial system. All this is fine. Mr. Bholaram understood everything, right? Now he knows everything about the financial statement. He knows how to read it. He's very happy being a hero number one. But after 4 years, again, he's confused. He doesn't know anything, how to go further. He doesn't know the road ahead, right? See, he wanted to expand his business, but he's going clueless. Clueless in the sense because he's a single person taking all the decision in the business. He's going clueless whether he's ready for the expansion or not, whether he should go for the like a new line of the business, whether he should go for the expansion, whether he should go for export. He doesn't know anything. He knows financial statement, but he doesn't know how to decide, right? He's not sure what needs to be done. Again, he takes help of expertise, and those expertise help him in financial statement analysis, right? That means in case if I have to decide about the future of my business, what I need to do, I don't need only financial statement. I also need to learn financial statement analysis, like Bhola. Okay. Now, what is this financial statement analysis? It is the collective name for the tools and techniques. There are various tools and techniques which helps us in doing this analysis that are intended to provide relevant information, right? Now, it depends on what kind of information I'm seeking from this analysis, right? Like Mr. Bholaram was thinking about the expansion of the business, right? There might be somebody who is talking about the new line of business. There might be somebody who is talking about closing the existing line of business, right? So it depends on what kind of information we are seeking. To the interested people. Now, who are these interested people? We have already learned. These interested people can be categorized as an internal user as well as an external user to provide them with the better information about such key factors for decision making and ultimate business survival. What are these types of financial statement analysis, right? See, when we talk about financial statement analysis, broadly it can be categorized according to the material used. When I say according to the material used, I'm talking about, what are the things which I am picking up from the financial statement? Am I picking up something for the purpose of decision making? Am I picking up something because I am involved in day-to-day operation? Or I'm picking up something because I'm just I'm only interested about the finances of the business and I'm not bothered about anything else, right? So when I talk about according to the material use, it can be sub-classified as external analysis and internal analysis. But when I talk about modus of operandi analysis, I'm talking about horizontal analysis and vertical analysis. Now, what is this external analysis? It is basically the analysis which is used by those who do not have any access to the detailed accounting records of the concern, right? So these are the people who are not a part of day-to-day operation, who are basically outsiders, which we have already learned, like investors, credited agencies, government and public, which is depending on the published financial statement of the organization. Right? Now, with the recent development of the government regulation requiring business concern to make available the detailed information to the public through audited account, the position of external analysis, auditor reports, which has considerably been. Now, what is this internal analysis? When I speak about internal analysis, I'm talking about the people who are doing decision making in the business, right? This is affected by the those who have access to the books of accounts and other relevant information. See, when we are publishing our records, we don't publish everything. There's a limitation. I may publish income statement, balance sheet, cash flow statement, and ultimately the auditor's report. And in some company rules, it is also directed. But when I'm talking about internal analysis, I might require a lot of other things. I might be requiring, a lot of other stuff in terms of costing. I might be requiring a lot of other stuff in terms of security. It could be in terms of insurance. It could be in terms of bad debt. It could be in terms of depreciation, or it could be in terms of wastage. So any financial analysis conducted with a reference to a part of the whole unit. Now, this type of analysis is meant for managerial purpose and is conducted by executives and employee of the business concerned, as well as sometimes the government agencies. So when I say government agencies, I'm talking about basically taxation authority, which has statutory control and jurisdiction over such units. Now, let's come to the topic of horizontal analysis. Now, what is this horizontal analysis? Why do we require it, right? What is the necessity of these horizontal analysis? Now, horizontal analysis is a comparison of financial information of a company with historical financial information of the same company over a number of reporting periods. It could also be based on the ratios derived from the financial information over the same time, right? The main purpose is to see if the numbers are high or low in comparison to the past. Okay? That is the reason we also call it as dynamic analysis or trend analysis. analysis, like what have been the trend, or whether the business has improved or the business has gone down when I compare to the past. Okay. Now, this method of analysis is grouping all the information together. It could be in terms of week, it could be in terms of month, or it could be in terms of year, right? So what we do, see, when we talk about trend, okay, for example, if I'm talking about in terms of trend, so there's a trend which is today, like there's a trend of people using masks, right? The people might be using masks, like a different type of mask. So could be a possibility once the vaccine is out, the trend of mask might reduce, right? So whenever I will talk about these usage of mask, my analysis will start from 2003, right? So basically, when we talk about trend analysis, there is something called as a base year, the year from which the trend has started. The same thing we do in the horizontal analysis. We take one particular as a base year and then we start comparing, right? So when we start comparing, we compare, like when we take the base year and we compare, we take the base minus 100%. Now, what is the advantage of such analysis? The advantage of such analysis in a company is the company can review its performance in comparison to the previous period. And then somehow they can, like calculate, or they can, kind of analysis, and they kind of gauge, like what is going to be their performance in the past. So basically what we do, we see, like how you people must be doing, this is my record in the first internal exam, this is my record in the midterm exam, or this might be my record in the second term exam. And on the basis of that, you will be, like preparing for your final exam, right? Similar way, like the company also does the same thing. Company will be having a past analysis of what all they have done and how they can improve ones, or how they can expand their business, right? So the advantage of this horizontal analysis is the company can review its performance in comparison to the previous year. So it is easy to like compare the past performance and deciding upon what would be the future of it. The disadvantage. Now, the disadvantage of this horizontal analysis can be misinterpretation of result. It can be manipulated to show comparison across period. Sometimes, like we so there are certain business organizations who window dress their accounts, right? So window dressing of accounts is possible when we are doing horizontal. Now, under horizontal analysis, there are two type of analysis what we do. One is trend analysis. Second one is comparative. So when I talk about this trend analysis, or trend percentage, what we do. See, in front of you, you can see, I have taken the records of 4 years, right? It's kind of, I'm not telling it is an income statement, but it is kind of, I have taken the records of our organization from their income statement. These are the sales in lakh of that particular organization. This is COGS, cost of goods sold, and this is the profit after tax, right? So if I see if I compare, in 2017, the sales were 300, the cost of goods sold was 180, and the profit percentage is 120. So it's kind of, I understand, yeah, I have got a 40%, right? So when I talk about 2018, sales was 500, COGS was 250, and profit after tax was 250. So kind of 50% profit, right? So when I am, like I'm analyzing this way, I'm like, yeah, profit has improved. First year my profit was 40%. Now second year my profit is 50%. But in actual, we need to see, is this trend, like whether I'm going to have the same trend in the coming year, or whether the trend has changed in the past, right? Now, how do we calculate this trend percentage? Whatever year you want to keep as a trend, like from which year you want to start and you compare. Business organization may take the year in which they begin. Business organization may take the year they started making profit. Like once, their no profit, no loss years are over. Could be a possibility the business may start their trend once they are able to recover from their losses. The business may start the trend, the analysis of the trend, maybe the year they have, got into a expansion, right? So it could be any year, it could be any trend. So whenever I talk about trend, the trend is the first year, okay? When I say the trend is the first year, in this case, since 4 years are there, I have taken here, you can see 2017 as a base year, right? So year 17, 18, 19, 20, the sales I have mentioned now. The year which we take as a base year is always taken as 100. I repeat, the year which we take as a base year is always taken as 100. And then we'll be comparing from that base year to all the years what we will be taking in the future. Now, if the sales, and the formula for this is the value of present year. So if I am calculating the value of the trend percentage of 2018, I will take it as value of present year, the sales is 500. Value of base year. So my base year here is 2017. The sales in the base year was 300. Since I have to calculate in terms of percentage, I'll be multiplying it by 100. So when I use a formula of 500 divided by 300 into 100, I get 166.67%. Right? I repeat, I take 500, that is my present year, divided by the base year, that is 300, into 100, because I need to present in terms of percentage. So the result here is the trend percentage here is 166.67%. Okay. Now, similarly, when I do it for 2019, my present year is 2019. The sale here is 800 divided by the base year, which is 300 into 100. My trend percentage here is 266.67. Same way we do it for 2020. Now, when we talk about cost of goods sold, right? 2017, the cost of goods sold was 180 lakh. Now, this is my base year. So since this is my base year, I'm going to take it as 100. In 2018, cost of goods sold increased to 250 because our sales has also increased. So it has increased to 250. So what I need to do to calculate the trend percentage, I take 250, that is a value of present year, divided by 180, that is a value of base year, into 100. So the trend percentage of 2018 is 138.89. Similarly, when I do trend percentage of 2019, so what I do, I take value of present year, that is 640, divided by value of base year, that is 180. So when I do this percentage, 640 divided by 180 into 100, I get 355.55%. Similarly, we do for 2020, 750 divided by 180 into 100. So the answer, the result trend percentage would be 416.67%. Hope you guys are getting it, right? So when now, in terms of profit, right? Because we have taken three things from the income statement, no? Sales, cost, and profit. Now, I want to know the profit percentage, the trend of profit over the years from 2017 to 2020. Okay, so I see here if you see every year, I feel this my profit has been increasing, right? I have profit every year, right? But when I see the trend, you can make out. See, the trend has been changing, right? So the graph goes like this. If 2018 my profit percentage has increased to 208.33, the 2019, the very next year it has come. Right? So when I talk about trend percentage of profit, I take the same formula, value of present year divided by value of the base year. So base year being 2017 here, present year 2018. So profit 250 divided by 120 to 100, I get 208.33%. 2019, 160 divided by 120 into 100, I get here 133.33%. And 2020, 208.33, if I divide 250 divided by base year, that is 120 into 100, right? So in this case, we get to know the trend percentage. See, when we talk about these financial statement analysis, only number doesn't work. There is something you need to analyze, right? See, only analysis you can't read. See, there might be people who might not be able to understand what is there, like non-accounting people, or maybe people who know accounting might not understand that what is mentioned in this trend percentage. So we also write notes. We also write a report. We write interpretation, right? So my interpretation goes this way. See, my sales has been increasing throughout, right? My cost also has been increasing throughout, but my profit is fluctuating, right? In 2019, my profit has come down. Now, the reason why my profit, it is not that I didn't have a profit, but the trend of the profit has come down. If I analyze in detail, or it's just, what is given here, it's a replica. So if I see what is the reason why, like my profit percentage has come down a bit. See, you can see here the cost 138, it has come to 355. There's a huge increase in the cost of goods, right? So in case if we have to improvise or if we don't want the trend to be affected in the future, right? So what we need to do, we need to control our cost. So the year 2019 gives us an indication in case if we are going for a increase in sales, we need to make sure that our costs are in control. So that could be the interpretation. I'm just giving an example. That could be one of the interpretation what we get when we are doing the trend percentage of this. Now, moving forward, if I talk about comparative income statement, comparative analysis, this is another kind of analysis what we do these days. See, this comparative analysis is about when we talk about trend. Trend is in the years, like trend could be for 4 years, trend could be for 6 years, because it is a trend. I'm looking out for my analysis for a longer period, right? So it is like the first year will be the beginning period, and the remaining period will be talking about the trend. So when we talk about trend, we are talking about the multiple. But when I talk about comparative, I'm only comparison. So comparison is done only between two things, right? So when I talk about comparative analysis, I'm talking about we take the base only for 2 years. So here, just an example, like I have taken 2 years, that is 2018 and 2019. The sales are 300 and 500. Cost of goods sold, again in lakhs, 150 and 200. When I talk about indirect expenses, all of us understand indirect expenses, right? The expenses which cannot be added to the cost or which are day-to-day operating expenses. That is 30 and 50. And profit after taxes are 120 lakh and 250, right? So when I see here, I can see, like it is good, like, year-wise, yeah, 300, 150 to 120, and again 40% and 50% profit. Now let us see compared to the past whether I'm making good profit or not. So how do we do this? Right? I'm so sorry, it is common size I have written, but it is comparative here. Absolute change. So what we do here is we see whether there is a difference between the previous year to this year. Again, I repeat, when we do the comparison, we do comparison only for 2 years, right? So previous year, that is 2018, the sales were 300 lakh. When I talk about 2019, the sales came up to 500 lakh, right? Is there any increase? Yes. Now, first we say increase in the terms of number, right? Increase in the terms of amount. So how much it has increased? It has increased by 200 lakh. Now, then I need to compare. See, because, reading number is not easy. Now, see, when I have written 200, I can't even make out that it is in lakh, right? So we do comparison in terms of percentage. Now, how do I convert it into percentage? So what I do, how much is the increase or how much is the decrease here? So when I say sales from 300 lakh has increased to 500 lakh, so my sales have gone up by 200 lakh, right? So why, if I have to calculate the percentage, I take absolute change. This is absolute change, 200 lakh divided by the previous year. When I say the previous year, it is always a first year. Okay. So my first year, that is the first year sale was 300. So when I do 200 divided by 300, again, when I'm calculating it percentage, I will take it to 100. So into 100, when I do, I get 66.67%, right? That means my sale from previous year to this year has increased by this much number. Now, second, when I talk about cost of goods sold, see here, I have just mentioned, here I have put it in a format. Okay. So when I talk about cost of goods sold in lakh, previous year, 2018, it was 150. 2019, it is 200. So my cost has increased only by 50 lakh, right? So when I convert, put it into a percentage, I do 50 divided by 150 into 100. 50 is absolute change. Previous year, that is 2018, is 150 into 100. So the ultimate result is 33.3, right? Now we all know what is the formula for gross profit. What is the formula for gross profit here? Like this one. Now, we get gross profit less indirect expense. So from the profit, when I deduct indirect expenses, that is 30, I get profit as 120. Here 300 minus 50, I get profit as 250, right? So when I compare indirect expenses of 2018 to 2019, 2018 it was 30, 2019 it was 50. So my absolute increase in indirect expenses is 20 lakh, right? So 20 divided by that is absolute change divided by the previous year, and the percentage comes up to 66.7%. Okay, and the profit after tax 120 in 2018, 250 in 2019, 130 is absolute change. So the percentage has gone up by 108.3. So this is just a glance of, like when I talk about horizontal analysis in terms of trend or in terms of comparative, we do. I have just taken income statement, so it is easy for me to analyze it because it is easy. It fits in one screen. Okay. Now the second analysis, what we are talking about is a vertical analysis. Okay. Now this vertical analysis, when I talk about, see, when I say vertical means it is like this, right? So it is like, like sometimes there could be a possibility a businessman, like maybe having a reduction in profit, right? And they don't know, why my sales are decreasing, or why I'm getting less profit, or why my cost, is going higher day by year, year by year. Could be a possibility, their indirect expenses are going very high. Could be a possibility, their stock wastage is more. So there are a lot of things a business person has to decide upon. So, when they have to decide upon, within the year, it is not, they're not talking about the comparison. They're not predicting the future. They're not talking about the, like they're not talking about the growth. They're talking about that there is something happening and I want to know the reason for this, right? So they usually go for vertical analysis. Or if a businessman wants to know, this is my capital. My capital is, for example, 10 lakh, right? Now, in this capital, how much capital belongs to me? How much is my equity? How much is what is the percentage of loan? What is the percentage I have taken, like from the bank? What is the percentage, the investor, like from the public, I have received it. So these kind of analysis, when they want to do, they do it through vertical analysis. Or I talk about asset, you might have asset worth rupees 10 lakh. Right? So you want to know what is the current asset, how much is your fixed asset, how much is, like in fixed asset, what are the assets you have and, what is the percentage of those assets, right? Or it could be current asset, like whether, like your debtors are on a higher side, or maybe, in your current asset, what is a component of your current asset, right? Which is a maximum component or the largest component of your current asset. So such analysis, when we have to do, we do it in analysis, right? So this refers to the analysis of ratios developed from one date and for one accounting period. See, when we talk about horizontal analysis, it spreads over various years. It basically the horizontal analysis minimum will be done for 2 years. When we talk about vertical analysis, it can be done for a week, it can be done for a month, it can be done for half a year, or it can be done for a year. So it depends on the requirement of the business organization, right? So when we talk about these vertical analysis, the vertical analysis can be done, in terms of what all. See, I'll give you a very simple example, guys. Like in keeping in mind that you people are in 6th semester. So, like when you see your overall, like your overall performance, so you will compare your overall performance for first semester to second to third to fourth to fifth, right? But if you want to, talk about, okay, I have got 90%, right? And then you are thinking about, no, like, I was expecting 95%, right? So you might be doing, like, where I lost marks. So what you start comparing. Okay, in management accounting, I've got 80 plus, I was happy with that. Income tax, I have got 90 plus, I'm happy with that. And, like maybe your corporate financial policy, you have got only 70. So there, where, I have gone wrong, or where I need to improvise upon, right? So when you do an analysis in terms of that you have a total and you're talking about something very particular, we do it on a vertical. So this refers to the analysis of ratio, and that is the reason we also call it a static or common size analysis. Now, vertical analysis does not facilitate a proper analysis and interpretation of figures in perspective and also comparison of a period of years. We are not talking about years. We are restricting ourselves to one particular period. It could be a financial year, or it could be some particular year which is required by the business organization. Okay. Now, say every analysis, everything, whatever you take has a notes, a disadvantage and advantage. So what is the advantage of this vertical analysis? Now, the advantage of this vertical analysis, it is useful for interfirm. Now, when I say interfirm, you might be having the same line of business. Maybe, in Delhi, in Mumbai, in Bangalore, in Chennai. Okay. So you want to compare, which store gives me the least wastage cost. Which store I pay the highest electricity bill, right? Or could be which store the salary of the employee is higher, right? So when you are whenever we have to do such kind of analysis, right? Or it could be interdepartmental comparison. It could be within the own organization. We want to see something relative, right? Proportion of something, right? So we do vertical analysis. Now, what is a disadvantage of this vertical analysis? You can't predict anything. That is the biggest disadvantage. A clear disadvantage of using vertical analysis that it is constricted by using a single time period. And also disadvantage of losing out in comparison excuse me, over different time periods to gauge performance. Now, taken a small example of income statement to compare income to compare common size to make common size statement of an income account. Now I have taken again 2 years. One is 2018, another is 2019. See, I have taken the same amount, so it will be easy for you people to analyze that when we do comparative analysis, what is we analyzing that, and when we are excuse me, and when we are doing common size statement, what is that we analyzing that. So when we talk about sales, the sales were 300 lakh, cost of goods sold 150, indirect expenses 30, and profit was in terms of 112. So I put it again in the form of income statement. So the sale of 2018 was 300 lakh, cost of goods sold was 150, and gross profit was 150. Now, my entire income statement, if I am able to make any profit, if I'm able to, get any revenue, fetch any revenue for my organization, the base of it is sales, right? If there is no sale, will we have any income? No. So the base of an income statement is sales. So what we do, we consider our sale as base, and it will be 100. Okay. So the sale, if I have to convert into percentage, is considered as 100. Now, cost of goods sold. Okay. The formula for common size statement is amount, whatever you want to calculate or predict, divided by the base amount. So base amount here is sales. Excuse me. Base amount here is sales. So cost of goods sold is 150 divided by 300. That is 50%. So in the sales made in 2018, 50% of the cost, 50% of the money has gone for cost of goods, right? So that is the analysis what we have made. Now, gross profit is the remaining part. If you do sales minus COGS, you get gross profit, right? So how much is the gross profit? The remaining amount, 150 is the gross profit. That is again 50%. Now, indirect expenses for that particular year is 30 lakh, right? So 30 lakh on how much sales? 300. So if 300 lakh was a sale, 30% was an indirect, 30 lakh was indirect expense. What is the percentage of indirect expense? That is 10. So how do I do it? 30 divided by 300 into 100. Now, if I have to calculate what is a profit percentage, okay? So profit percentage is basically 120 is a profit divided by 300 is a sale. So my sales was 40%. See, I have taken it 2 years, so it is easy for you people to understand. Okay. Otherwise, common size statement is done only for one particular year. Now, similar way, when I do it for 2019, the sales was 500. Okay. The cost of goods sold is 200. The gross profit was 300. So when I compare, how much is my cost compared to sales? It is 40%, right? When I say profit was 300 and the sales is 500. So how much is the profit percentage included in the sales? Gross profit, 60%. Okay. Now, when I talk about these indirect expenses, which was 50, so 50 divided by 500, my indirect expenses still 10%. And when I talk about profit after tax, 250 divided by 500 divided by into 100, that is, right? See, if the same thing you have to go in terms of comparative, you would have done this way in a horizontal way. But when we talk about vertical analysis, we have done it this way. The way we have done income statement over here, the similar way we do, balance sheet also. Now, if I had to do a balance sheet analysis here, for my balance sheet analysis, say example, if this is my balance sheet, And if I have to do a common size balance sheet from this, so what I need to do here is I need to take amount for this year 2019. Then see, these are liabilities: share capital, debenture, creditor, bank overdraft, and total. So when I talk about this total is liability, total liability. When I say plant and investment, debtors and cash, so this is my total asset. Now, if I want to know what is the proportion of share capital over total liabilities, so how am may I request like whoever it is, like just to mute your audio. Now, if I have to do this analysis, so what I do here, I make another column. Okay. So I'll just try. If I have to convert it into percentage, what I do here is, okay, see, my share capital is 4 lakh, okay, and my total liabilities are 8,62,000. So to know the percentage of how much is the share capital over total liabilities, I do 4 lakh divided by 8.62 into 100, and I will get the percentage. Okay. Now, similarly, if I have to do this, I take 2 lakh divided by 8.62 into 100. Okay. Now, there is another, like, since you people use calculator, you don't need any, shortcuts in the calculation. Otherwise, my time when we never had calculators and we were not allowed to use a calculator, we used to do 100 divided by 8.62, and then we used to keep multiplying, because multiplying in the exam was much easier. So this is a way, like we used to do, we can do our analysis. Now, in case if you guys are sitting with your pen and paper, sir, have we allowed students into the Zoom?
No, ma'am.
So that they will not be able to solve it, right?
No, ma'am. No, ma'am. No, ma'am. No, ma'am.
Thank you, sir. So, like I am actually, I thought that students will be allowed the Zoom. So I thought, like
only very few are allowed, ma'am. Very few are allowed.
Okay.
Okay. I request participants who and all are available on the platform now, so they can just help it out. Okay.
No. I thought, in case if they all are here, so it will be easy for us to do the calculation. Like,
yes,
if
ma'am.
they
Yes,
can do
ma'am.
one question here directly.
Yes, ma'am.
Unless they don't practice somehow, that it will be little, odd for them also to do it.
True, ma'am. True. I will just look into it, ma'am. I will just.
No problem, sir. No problem at all. So this is the way we calculate percentage, because I calculated my time period. This that another 5 minutes if we all solve the question and my class will go to end. And are we allowing them any question answer session or something like that? Like, is there any possibility a YouTube question answer session or something? Sir? Vijesh, sir?
No, ma'am. No, ma'am. No such kind of part, ma'am. Like, we are not allowing students to ask any questions because it is one-side delivery part, ma'am.
Okay.
Yes,
I should have clarified all these things. Like,
yes, no issues, no issues.
Yeah. And can I wind up my presentation early? Because, like I thought, there'll be a question answer session, and that's the way I had planned it.
No, we can take few questions. Those who are available on the platform in the Zoom, ma'am. There are almost 25 students are there. So I will request them to just ask few questions.
Yeah. So I will just, and this is a way we are doing our analysis. And one thing also I want to tell you here, see here, the total will come 100. Okay. Because all these will have a percentage, and the total percentage will come up to 100. So total asset, total liability will be 100, and all this will have a proportion, right? Now, this is a way we have taught Mr. Bhola Ram in the financial statement. And now, since he knows, like how the analysis is done, he's relaxed and he's thanking on us. Teach him the financial statement analysis, and somehow we could teach him the financials. So, sir, I'm done with my presentation for today. So I'm actually ready for the question and answer.
Okay. I request any of the student to just ask if you have any kind of doubt here. Okay, that will be really fantastic.
Yeah, and it would be nice actually, you know, like because as a teacher we get energy from the opposite side always.
Perfectly said, ma'am. No doubt about that, ma'am. Okay. Students, you can ask any questions if you have.
See, if there are no questions, then there are only two possibilities, right? Either you have not understood anything or you have understood extraordinary. So that is not possible because to understand financial statement analysis, just 1 hour is not enough.
Yes, ma'am. Madhushri?
Yes, sir.
Do you have any queries?
No, sir.
How was the presentation?
It was good, sir.
Did you learn something?
Yes, sir.
Or did you learn many things?
Many things, sir.
Good. Okay. Ma'am, actually, your presentation was really good. And it was very simple and fantastic, actually.
Because you told me actually they for undergraduate students actually. So
yes, ma'am.
Yesterday I changed all my presentations. You know, I had earlier, keeping in mind previous students had made the presentation. Then again,
Yes.
I simplified it to undergraduate.
So we had the mix of students, ma'am. Like actually, there are some of the students are degree students and some of the students are PG also. Like our own MBA students are the part of this program. Okay. So that overall, actually, we have got many good responses. But it is a kind of mixed students, ma'am. Degree with PG. So most of the students are belongs to the UG only, ma'am, not the PG actually.
And keeping in mind, you know, so like, you know, in case if they're UG students, like first semester or, you know, third semester,
yes,
fifth semester, they would have hardly learned analysis by now. They would have just started. So I thought, you know, why not start with financial statement and then come to analysis?
Yes, ma'am. No, ma'am. That is the reason we have kept this program in the extensive way. Like, let us do it for the. Let us not do the one day and load with all the content. So that is why we have.
Possible also.
True, ma'am. Okay. So on behalf of our institutions and behalf of the participants, ma'am, I thank you so much for giving
thank you for giving me the opportunity.
For giving a wonderful presentation actually. And on behalf of our management, principal sir, HOD ma'am, and department faculty members and the students, we thank you for giving a wonderful lecture. And I thank all the participants to attend at this point of time. Actually, now the time is almost 8:10. And I can see on the YouTube live that many participants are joining and they are keeps on updating their details also, which will be used actually as a attendance part for them. So yes, ma'am. Thank you so much, ma'am. Have a wonderful day.
Sir. You too, sir. Thank you so much, sir.
Thank you, ma'am.
Thank you, and all the very best to all the students. God bless you all. Thank you.
Thank you. I request all the students to join tomorrow. Okay. I request all the. Okay. I request all the students to join tomorrow by same time, 7:15 p.m. Okay. Have a good time to all. Be home, stay safe, and stay happy. That's it.
Thank you, sir.
Thank you, man. Thank you. Thank you all.